Students, hello students, I am Palladarwari. Welcome you all in my YouTube channel Palladarwari classes. In this video, I will discuss the second chapter of the macroeconomics, class 12th. The name of the chapter is National Income Accounting. It comes under the first unit, and the weightage of this very unit is 12 marks. In this particular video, I will discuss two important topics. The first topic that I will discuss in this video is goods and its type, and the second important topic is stock variable and the flow variable. From these two topics, 3 marks questions can be framed. Let us start the video with the meaning of the goods. If we have to define the goods, we can say that thing that has the utility for the consumer and has the market value is called goods. So what is goods? Thing that has the utility for the consumer and has the market value is called goods. If we have to categorize the goods for the better confabulation, we can say that goods can be categorized into two categories. It can be the final goods also, it can be the intermediate goods. So good can be categorized into two categories, final goods and intermediate goods. Let us see what is the final goods. Final goods refers to those goods and services that are meant for final consumption by the consumer. In other words, such goods that are ready for the final use is called final goods. The final goods is that type of the good which need no further transformation. It means that in the case of the final goods, transformation is no longer needed. Such goods have already crossed the boundary line of the production. These goods are generally meant for resale by the purchaser. For example, a cotton balls at a retail shop is a final goods. Such cotton is ready to be used by the consumer for various purposes without any requirement of further value addition. Similarly, a car at a showroom is a final good ready to be driven out on the road. The final goods can be classified into the following two categories. The first one is called final consumer goods. The other name is consumption goods. And the second is final producer goods or the capital goods. Let us see what is final consumer goods or the consumption goods. Consumption goods refers to those final goods that are purchased by the consumer or the households to satisfy their wants. These goods are not used for the production of other goods and services. In a very simple word, we can say that consumption goods are those goods which are consumed or which are purchased directly by the household for their direct satisfaction. They are not purchasing it to manufacture other goods. Based on the value and the time period for which they can be used, consumption goods can be classified into three categories. For the better understanding, just to avoid the confusion and the chaos, we can categorize the consumption goods on the basis of value, on the basis of the time period. We can say that consumption goods is of three types. Number one, consumer durable goods. Number two, consumer non-durable goods. And number three is consumer semi-durables. Let us see what is the consumer durable goods. Consumer durable good refers to those consumption goods that can be used for a longer time period. These goods generally have a high market value. In the hot question, it can be asked why the consumer durable goods have high market value. The reason is because these are purchased. Why these are purchased? Because it has the longer time period. Any good which is being purchased for the longer time period, definitely it has a high market value. During the course of consumption, these goods are used more than once and repeatedly. For example, car and the computer, these are the example of the consumer durable goods. The second is consumer non-durable goods. Consumer non-durable goods refers to those consumption goods that are meant only for immediate consumption. The good that is being consumed and after the consumption end up, that is called consumer non-durable goods. Consumer non-durable goods generally carry a low market value. Why it has the low market value? Because it is only meant for immediate consumption. It cannot be used again and again. For example, fruits, vegetables, milk, etc. These are the consumer non-durable goods. Let us see the next one. The next one is consumer semi-durable. Consumer semi-durable refers to those consumption goods that can be used for a longer period of time but less than the durables. These goods carry a relative higher market value than the consumer non-durable and can be used more than once before getting finished. For example, the clothes, shoes, pen, etc. It can be used again and again, but its life is lesser than the durable goods. Now let us see the other thing also. It comes under the uh, consumption goods, that is the services. Always remember, as against the consumption goods, services are non-material in nature and they satisfy human wants directly. Example, the services of a doctor, services of a teacher, etc. Now let us discuss the second type of the final goods. The second type of the final good is final producer goods or the capital goods. Capital goods refers to those final goods that are purchased by the producer or the firm for using them in the process of production. In 1 marks, it can be asked, what is the basic difference between the intermediate goods and the capital goods? And the difference is the final or the capital goods are purchased for using them in the process of production, whereas intermediate goods are used for the production of final product. It can be used in the process and the intermediate goods will be used in the production. Clear? As a raw material. It can be asked in 1 marks. Now come to the main point. Capital goods enable the production to take place. These goods enable the production to take place and thus act as a fixed asset for the producers. These goods forms an important part of the process of the production. They are durable in nature. When I say durable in nature, it means it can be purchased for the longer period. For example, the boiler, for example, the machineries with which the producers are doing the production, and the life of the machinery is 10 years, 20 years, 15 years. So it has a longer time period and it undergoes wear and tear because it's asset. And generally these goods carry a high market value. Why? Because it is used for a longer period. Now let us see the next one, next type of the goods, that is the intermediate goods. Intermediate goods refers to those goods that are not readily consumed as final consumption by the consumers. Rather, these goods are used as a raw material in the process of production. In a very simple word, we can say that intermediate goods undergoes further transformation. Such goods have still not crossed the boundary line of production and addition in the value is continuously going on. For example, log of wood, it is a intermediate goods. Why it is an intermediate good? Because it can be used to manufacture chair, to manufacture table and so on. For the quick revision, we can see that the goods is of two types, final goods and the intermediate goods, that you can see right now. Final goods and the intermediate goods. Final goods can be categorized into two categories, consumption goods and the capital goods. Consumption goods is of four types, durable goods, non-durable goods, semi-durable goods and services. I hope the point is clear. Now let us see the difference between the final goods and the intermediate goods. This difference can be asked in 3 marks. Let us see the first point of difference is use. Final goods are readily for final consumption, whereas intermediate goods are not ready for final consumption. Second point of difference is further processing. Final goods do not require any further processing, whereas intermediate goods requires processing and undergoes transformation. The third point of difference is production boundary line. In the case of the final goods have crossed the boundary line of production, whereas intermediate goods still are not crossed the boundary line of production. The next point of difference is resale. These goods are not meant for resale, whereas intermediate goods, these goods are resold for production of other goods. The next is inclusion in the national income. Final goods, the money value of the final goods is considered at the time of valuing the national income, whereas for the valuation of the national income, the intermediate goods is not considered. Example we can see, example is cotton purchased by a consumer for personal consumption, and when the same cotton is purchased by the textile industry for manufacturing cloth, that is the intermediate consumption. I hope the point is clear. Now let us see the next important topic. This topic is very important. 3 marks question can be asked, 1 marks question can also be asked. That is stock and flow variable. Let us see. A variable is a quantity that is likely to change over time. In other words, a variable assumes different values over different point of time. Various variables used in the study of economics can be divided into two categories. One is called the stock variables and the other one is called the flow variables. In a very simple word, we can say that the thing which changes with the time is called variable. And in the economics, there are two types of the variable. One is called the stock variable and the other one is called the flow variable. Let us see what is stock variable. A variable is said to be a stock variable if it is measured at a particular point of time. Here the time element is not attached. In other words, they are measured only at a single point of time. For example, capital at the year ending. Now let us see what is the flow variable. A variable that is said to be flow variable if it is measured during a period of time. If it is measured during a period of time. Such variables are measured over the time interval, so the time element is present, and the time element in the case of the flow variable plays a very important role. For example, income earned during the month of March. Now let us see the difference between the stock variable and the flow variable. This difference can be asked in 3 marks. So we have to learn 3 differences. The first point of difference is definition. The stock variable is measured at a particular point of time, whereas flow is measured over a period of time. Time element, in the case of the stock variable, the time element is absent, whereas in the case of the flow, time element plays a very important role. The next point of difference is nature. The stock variable is static in nature, whereas the flow variable is dynamic in nature. Next is example. The capital, bank deposits, water in a tank, these are the example of the stock variable. And capital formation, that means investment, interest on capital, water flow in a stream, these are the examples of the flow variable. That's all I have in this video. Dear subscribers, if you like the video, please spread the video to more and more students so that more and more students should be benefited. During this pandemic time period, it's a request, it's appeal. Stay home, stay safe, and above all, don't forget to wear mask. Om Shanti.